It's great to be back with you again. This is Business Morning, live to you on Channels Television, your home for the news. I'm Harriet Agbeni. Let's start the show. Of course, this week is a very important week. We're counting down to the temporal closure of the Nnamdi Azikiwe International Airport in Abuja. And most of the flights, of course, will be diverted to the Kaduna Airport. And so we're tracking that development for you and, of course, taking a look at some of the issues that will be coming up, quite a myriad of them. You can go to any of our Twitter handles and talk to us about what you think about this closure, counting down to it, of course, and most of the challenges you think that will be faced and encountered in the run-up to that closure. Let's take a look at other stories, of course, making headlines at this time. How many assets does Nigeria really have? Let's keep tabs on our assets. That's what Nigeria's government wants to do. And they've gone ahead to launch an asset tracking and management project that will allow it to locate, identify, assess, and evaluate all movable and immovable assets. According to the Minister of Finance, Kemi Adeosun, a central asset register has also been created for the registration of all capital assets belonging to government. Now, the asset tracking and management project is expected to, among other things, ease the planning and control of the 30% capital expenditure in the 2017 budget. Meanwhile, a circular has been dispatched to all of this federal ministries, departments and agencies to that effect. Now, the Central Bank of Nigeria has directed all commercial banks in the country to create a special teller point for retail FX transactions to ensure access to foreign exchange by Nigerians. And all banks have also been directed to own electronic boards displaying exchange rates of all currencies in circulation, talking about the foreign exchange now. And this is also part of the central bank's move to ensure easy access of foreign exchange by Nigerians who have to pay for school fees, medical fees, as well as key sectors of the economy who need to access this in real time. So they've been mandated to process and meet the demand for travel allowances in 24 hours. School fees and medical bills are to be processed within 48 hours of applications. And failure to do this attracts serious sanctions from the Central Bank of Nigeria. So you know what to do if you actually go to the bank and make demand for any of this certified and allowed methods of accessing Forex, and you don't get it for the stipulated time, which is 24 hours for travel allowances. School fees and medicals have about 48 hours for your applications to be processed. You should actually let this be known by the relevant authority, which is the central bank in this case. Now, indigenous oil marketing company Conoil has beefed up its Kaduna Aviation Office to reinforce operations on the heels of the Abuja airport shutdown for 6 weeks, relocating its high-tech browsers, dispensers and human capital. Now, this decision, it says, is to help smoothen the operations of airlines and travelers. Also in the news, the federal government has scrapped the 10% equity contribution for housing mortgages below 5 million naira from approved off-takers. That's good news, especially since we know that the Ministry of Power, Works and Housing has very strong commitment to provide affordable houses for Nigerians, especially low-income earners. So those are some of the stories we're tracking for you at this time. But let's also take a look at the markets where they finished off from the week we're just coming in from. Now, notice that investors continue to book profit of most of the equities as they digest most of the company earnings that have been coming in, quite disappointing numbers. But for those that have actually had improved top and bottom line, investors have not shown very strong apathy towards them. So starting with the Nigerian, taking a look at the NSE now, the all-share index and market capitalization were off almost 1%. The all-share index finished at 25,012.08 with a market capitalization of 8.65 trillion naira. Notice that volume came in lower, 1.38 billion naira from the previous week. We had value at 13.72 billion naira and deals at 15,422. And in spite of the improved showing from some of the indices, including the oil and gas index, it was not enough to push the main market into winning ways. But let's take a look at the Nasdaq OTC market now. That finished off very strong at the end of the week, up 4.15%. That's the unlisted securities index at 612.50 with a capitalization of 414.49. Volume and value also improved for the week just ended with transactions of 66. But let's take a look at the fixed income segment of the market now. Now that had mixed sessions for the week just ended. But taking a look at Friday's closing now, there was a little bit of a muted trading, particularly for FGN bonds. Now, according to dealers, that was as a result of unsettled trades by the bank. So there wasn't any strong trade around FGN bonds because the banks needed to clear off some of the issues, the backlogs that they had. So we had only 2 FGN bonds traded on Friday, the bond maturing on the 18th of July 2034 and the bond maturing on the 29th of June 2019 with 2 deals apiece. So at the end of the day, only 4 deals with a value of 2.30 billion naira was recorded. Now for the treasury bill segment of the market, that also saw some sort of tepid trade on Friday, with the most actively traded being the bill maturing on the 29th of June 2017 with only 8 deals done and a discount high of 18.09%. Notice that this top 4 of the 25 thereabouts benchmark treasury bills that were traded on the FMDQ OTC Securities Exchange. Notice that investors continue to favor short to medium dated bills. So that also still tells you that investors' apathy is still, well, as I said, tepid. And they're still waiting and hoping to see some dynamic changes in the economy, and that will begin to determine how they begin to play in that segment of the market. But we're still talking about the state of economy and moving away from the markets.